So Rigel Pharma is going to test a new drug, and this one is a bit of a surprise. I don't think they knew that they were going to be doing this. Um, and I guess the other COVID news here is that California is shutting down bars and restaurants. So it looks like we're actually getting a bigger spread, and the west coast of the U.S. is getting hit now, whereas the previous big breakout was mostly along the east coast. But what happened here is Rigel Pharma has some drugs that are unrelated to COVID-19. Oh, and go check out the COVID-19 playlist to check out all of these different stocks because some of these get really cool, like bull market trend lines um, that are fun for like day trading and swing trading. And yeah, so Rigel Pharma has a drug that it's a spleen drug. So it's yeah, here it is. Spleen tyrosine kinase. And so this is a drug that's already approved in the US and the UK for spleens for spleens. So this is fostamatinib, fostamatinib. I don't know how to pronounce that one. And so this is potentially useful for the pneumonia, the ARDS, the acute respiratory distress syndrome for COVID-19. And it just kind of randomly came up because researchers at MIT and Harvard were looking for biomarkers in existing drugs that are already approved. And this is the only one that they found for this biomarker that they were searching for. And so yeah, fostamatinib is now going to be tested out to see if it's useful in pneumonia for COVID-19. All right, so here it says the Imperial College of London is hosting the trial, and it's going to be randomized. And I read in a different article that they're going to use a Novartis drug and this one, the fostamatinib from Rigel, and then a placebo to see how it affects different patients. And so this is a company that wasn't planning on creating a COVID drug, so this should be a pretty interesting chart to look at. And let's see what we're getting. All right, so this is an interesting chart. This goes back to 2001. I'm out on the weekly candlesticks. And so they have a long-term bear market leading into the recent trading. Let's get on dailies and see how this has been moving since the Fed crash. So yeah, here this is kind of a weak chart for a biotech company, although this was unrelated to the COVID-19 or coronavirus stuff, but it came into the crash a little bit bearish and rebounded pretty weak, but it has found decent support, through this area. So yeah, let's get in closer on this and see what this looks like. So this is a pretty interesting looking sort of news blast chart here. So this could be a pretty cool one because this company has not had any hype related to coronavirus or anything like that. And then we've had a pretty stable chart around, a little under $2 for the last couple of months. So it has a good kind of stable base that it's taking off from here. And now this stock could potentially get on the hype train. And we don't have enough information. This is the first blast related to anything to kind of paint a bull market line, but it did not just collapse immediately on the news blast. It did flag out, and so that's a good look. Yeah, so a lot of these stocks that get coronavirus related news blasts, they'll shoot up usually pre-market, and then they'll just crash right back down during the day. And so this stock going to do that. This is fully flagging out, and usually when it does this sort of flag, it'll get another up move before it starts coming down, and then you can kind of find if there's a bull market line to work with. And so this trial is just 2 weeks. I didn't see when it's starting. Let me check. So yeah, it says the trials are starting. It doesn't say a date, so I assume now or soon this week, but it's a 2-week trial, so this chart should be hot for the next couple, next week or two, because the trial is just happening now, and we'll see what's happening. So they're going to administer it to mild patients and see if this drug or the Novartis drug shows a lower rate of progressing to more severe pneumonia in COVID patients. And so this one should be really interesting just now. And this trial, if it's successful, this thing should take off on a pretty hot angle. So I guess basically this is a lottery ticket now that is still kind of cheap, because it's just starting out of nowhere. This wasn't even a company that was related to COVID prior to this. And then just on the technicals, since it did its flag out, I would expect it most likely to pop up a little bit more, and then the best buy spot usually would be a day or two after the flag. And sometimes will stay up a little bit and then come back down, and then that's the area where I've seen on these kind of news blasts where the best buy area usually happens. So this kind of flag pattern is a lot less common than just the parabolic kind of reversal news pattern, where it just comes right back down close to where it started. But this one looks pretty good. It looks pretty good, and this is a trial they're doing just like right now over the next couple of weeks. And so this one will be pretty interesting. And it's getting a positive chart already. And so we don't have any kind of established, trend for this. But in the next couple of days, if we start to see support, we can work on putting in a trend line wherever that might, wherever that might be. But yeah, generally in terms of these kind of flagging patterns on the news blast like this, it will still usually comes below the flag. So I would be looking at an entry point somewhere in the maybe $3 area, somewhere in here. And this could be over the next couple of days for it to kind of loop and kind of come back down to support. And then, as soon as it finds support and kind of holds, that is a good area to start going long on this thing. And then, in 2 weeks, we'll find out what's going on. So, because of the short time length of this, and you should be getting another news blast soon. It's not going to be 2 months before there's more news on this. It's an interesting one. It's an interesting one for just swing trading or possibly day trading. If you like these kind of setups, if it gets another parabolic move up after this flag, it usually won't flag twice. I mean, if it popped up to like crazy 8 or something like that, it could be a spot to short it back down to wherever. Just kind of on a day trading setup, watch for it to shoot way up, or for a swing trading setup, more watch for it to find support and then kind of figure out where the trend line is, and it'll usually like bubble and bounce above that trend line. But we only have 2 weeks here, so that's kind of the look at this one. Rigel Pharma for the pneumonia drug, and I'll put some more info in the description with the names of the drugs and everything. And then the S&P. So this is getting a little bit wild, and the VIX is getting a little bit more wild as well. We have this. Let's get out a little bit wider. We have this area. We have this area back here where we did our previous top, and so now we're getting wild action right adjacent to the top here. And we have this trend line that has gotten a ton of action on it. And I like this trend line even more now, because now we're getting these kind of gap movements, and they're all relative to this trend line. We get a gap up to it here, we get a gap here, we get a big move down here. and they're all like rooted right on this line. So I think this line is very hot, and then the zone from 3193, kind of at the bottom of the previous top over here, up to the top where it reversed last time. And I think it did go a penny or two above the top last time before it reversed down. But right now, we're just in the middle of the top here. And so this is a second attempt for the bulls, I guess, to try to break through the island top zone. And then I have this long-term bull market support line that supported the the market from the 2018 crash until the Feb 20 crash this year. The previous 2 years, this line above us supported the market, and now we're below it, and we've rejected off of it once. So in order for this market to actually get bullish, it needs to get above this line and use it as support. And once the market gets up here, this is bull area. And I think a lot of people on the technicals will be saying it's super bullish as soon as it gets above this island top area over here. But this is my major line that I've been looking at, over the last couple of weeks, seeing if we're going to break down or up. We keep swinging back and forth, but this is the upward target for me, is just to get up here and see if we get a major rejection off this line again. It should be really bearish if we reject off of this thing. And it should be very bullish if we get above it. And yeah, and so it looks like the earnings are kind of a mixed bag so far. Like Pepsi came in with really good earnings. Wells Fargo came in with absolutely terrible earnings. And so it's just kind of a mix, but the overall market has liked the earnings, even though the numbers are bad. We expected them to be bad. The market is not crashing so far, and it's popping back up into this area where it just was. So yeah, I don't know that this is much of a setup in either case. Now, like where this is trading is right in between, resistance support areas. We're just in between on a small area. It could get stuck in here for a while, and then we have this area, right? Oh, this area just we have the area below that we've been trading around like crazy for the last bunch of weeks here, and then we're in between a bunch of support and resistance zones. That's really tight here, and there's not much of a trade setup here except for just generally it looks like it's flagging out. So it's more of a bullish setup, just since it's flagging out off of an up move that's usually more bullish. But this is also off-market trading, so you're going to need to see a little bit more on after the market opens to see what the cash moves look like. But there's a ton of support and resistance all in here. So I don't know, the VIX is going up. It's going up and up. So, I mean, the VIX is saying big moves can happen, but it is sort of a tight range. So, yeah, it's like 60-40 bullish kind of setup, but really hard to predict what it would do if it tries to make a bullish move from here. Yeah, I don't really like this area. I think we're still in a really weird area to try to set up, short-term or long-term trades, because I mean, on the long term, well, we have some dollars. Let's take a look. So the dollar is trying to break down. Okay, so this is going to be pretty bullish if the dollar can break down. Yeah, this is interesting. So this support line is a very long-term support line. It's like 10 years, and we bounced off of it, and now, well, let's see what we get. If we can actually break through here, down to wherever, 94 or somewhere, if we actually break down, if we just get wobbly stuff near this trend line, like this is not like right on the money trend line. This is a longer term trend line. So any kind of wobbly stuff above 94 and here is still kind of in this area. But if it starts breaking down farther than that, then that could be really bearish on the dollar. That could be an inflation indicator. That could be good for stocks and gold and silver all at the same time. And so those are trends to look for that may be happening that haven't quite happened yet. Let's see if the yen is broken. Sometimes the yen leads, and the yen's breaking down, which is usually bearish for the stock market when the yen puts on a candle. Like this big red candle and this one and this one, these all preceded down moves in the market over the last month or so, and we're getting another one here. So that's kind of a mixed bag on signals as far as things that have actually been helpful. And then Bitcoin is just doing boring stuff still. It kind of broke down out of the zone, out of the ascending zone, and then now it's just been trending sideways forever. I didn't mean to click on the Bitcoin, but the VIX is doing something pretty interesting here. So I mean, we saw that the S&P is trending sideways or up, and the VIX is generally opposite the S&P, but right now we're getting the VIX going up at a pretty decent angle at the same time as the S&P is going up. So the last time that these two were correlated like that was right before this big move down that we got in the S&P off the big peak. So yeah, that's a bunch of mixed signals. And I guess on the liquidity and the volatility, those things are all looking more bearish. The short-term technical setup is looking a little more bullish. And then the dollar is starting to look like it would be bearish for the S&P, but it hasn't quite happened yet. But then the yen, or I'm sorry, the dollar breaking down should be bullish for the S&P, but the yen is moving down at the same time. This is weird. So there's not a lot of stuff to go off of that makes sense on a trade setup, and this is a really weird area to try to go long or short on the general market. So I don't know. I'm not looking at setting up any trades on this right now. There's not a lot of room overhead until we get to an actual bullish area. If it does go up, this is when it starts getting more interesting in the bullish cases up here. And we have a lot of room to go down here. I mean, we have a couple of support zones and then not much below that. So I think a bigger down move is possible than an up move from here. But the odds of an up move seem to be slightly higher in the short term. Yeah. So I don't like it. I don't like the setup. But if the dollar does start breaking down more, things like silver start becoming better, and gold, it should be fine for gold really either way. But the dollar breaking down should be an inflationary type of indicator that should be, if we start getting inflation indicators, though, the bonds should be trading up. So I mean, we have the bonds trading down and the dollar's breaking down at the same time. So it's just kind of a mess. It's just a mess. I think this is not a good spot for any kind of a setup on the bullish or the bearish side until there's a little bit more of a technical formation that makes more sense. And also it's so weird. It's just such a crazy like mixed bag of signals. And so I think this should be a really cool week. I mean, we get earnings, but also we're just kind of on the edge of a bunch of big indicators. I mean, is the dollar going to break down? Are the bonds going to break down? And then we can get an inflation outlook that could be a couple months or a couple year kind of outlook pretty soon that should be actually useful. And then also, yeah, we'll get to see some more balance sheet stuff soon, like tomorrow aftermarket, which has been a really important indicator. So yeah, with limited liquidity, I mean, we've just basically just been moving kind of sideways here. And this previous spot where we chopped sideways a bit is where the Fed liquidity slowed down a little, and then they sped it up. And then here they've actually been decreasing the balance sheet, and it has not responded. I mean, it's stayed up pretty well with really minimal, liquidity being added. So yeah, so I guess I'll just zoom out and show the whole volatility zone. I mean, this goes back to 2018. This is Volmageddon, where we got the first volatility spike here. And, we've been just swinging like crazy across this zone, and it's this widening volatility zone. And so we're up, on the upper edge of this range. And then we have these support lines that supported the market. I mean, this lower line is 12-year support, and this upper one is a 2-year support line just from the 2018 crash area. And so that's where we're swinging now. We got a bunch of activity around this line. The last time we crossed it, we bounced off of it, back tested it, double back tested it. So this is a pretty hot line. So just like the immediate targets, if we do get a big move, like a day or two move in either direction, I mean, these trend lines are the target, and you can get all the way to either one from here pretty easily. And it's a big move. If it makes a down move here, it's, under 3,000. And then this volatility zone, it takes a month or two. It's been taking a month or two to make a big cross across the volatility zone. I think this is like a 3-month kind of move here. So in the span of a month or 3 months, you can rip all the way across. So, if we get above here, then this is kind of the next target on the upside, is all-time highs above here, but in this volatility range. And it's not, it's not perfect, but once we get up into this upper edge of the volatility range, that's where we've been making big crossovers. So it's still a little crazy. It's not like if we pop out of the top of here, like it's just smooth sailing forever. Like this is still a crazy market, and we're still dealing with this whole zone. So I think there's going to be risk of big time moves for the next couple of years. And then, of course, the downside, it's way down here below the lows. And so over the course of a week, it'd be pretty easy to get to either one of these trend lines. And then over the course of a month or two, you could easily move to the outer edge of the whole volatility zone. So that's the range that it's trading in. And we're slightly to the upside now. So this looks, I like this target for now, I guess, as the highest probability target. We had a couple of failed breakdowns here, so it looks like the bulls kind of turned to make a move, and this is where I'm looking at this upper line. And this is not investment advice, as always, but 3,285, that kind of area, which is not too far. I mean, we're pretty close to this previous peak here, and it's just a little bit higher to get to there. So I don't think that's too crazy of a target, but I don't think that's a super high probability that we just go there. I mean, maybe, looking at the technicals, maybe 60-40, but most of the other stuff is a bearish kind of look with the liquidity and the volatility and things like that. So I don't know. This is a crazy zone. Have fun with it. And then, of course, yeah, these biotech stocks have been pretty interesting trend lines. I mean, once they set up a little bubble trend line, they can do a bunch of uphill bounces, and those are pretty fun to trade. And so that's just kind of the outlook for today. Just kind of a wild zone with increasing volatility uphill. So yeah, that makes me think, even if we get up here, it's pretty hard to be it's pretty hard to be bullish with the volatility way up there. Like, it needs to get out above this area, and the volatility needs to calm down. Yeah, to actually be bullish and not just like crazy, a few things need to happen. It's not quite there yet. But yeah, just in general, like, it's absolutely crazy. I mean, 2000 is the lower edge of this volatility range looking out, a month or two, and the upper edge is 3,500. So this market's crazy, and have fun with it, and don't be surprised if some big moves happen because they're very possible. And happy trading.